But I do feel like there's kind of this internal turmoil right now in terms of the environment. Is it inflation we have to worry about? We saw that companies announced the most job cuts for any October in more than 2 decades. This from Challenger Gray and Christmas, and they did talk about an AI component to it. I can't figure out where we are. What do you think? Where are we?
It's like the flavor changes almost literally every day, because this morning, I mean, it was much more labor-driven. You had the Challenger data you mentioned, but you also had data from Revelio Labs, which has become, much more important to look at in terms of private sector providers and what they're looking at for job growth. And what they showed for October was a decline of 9,000 for payrolls. But, for me, the labor market stuff is almost this hall of mirrors, because all of the different indicators tell you completely different things as to what's going on in the labor market. If you look at claims data, which we're not getting at the national level, but if you aggregate everything at the state level, it still looks relatively healthy. It's stayed relatively low and stable. If you look at ADP for October, surprise to the upside, as we learned, a couple of days ago. If you look at something like Revelio, though, weak. If you look at something like Challenger, also weak. The interesting thing with Challenger is, and we always try to make this, important distinction and emphasis for investors, they're layoff announcements. They're not exactly cuts themselves. So there is a little bit of a lag there in terms of what you can expect.
Yeah, oftentimes 90 days.
Right. Plus, I think the one thing that is, I will say, maybe a little bit more worrisome with the one for October relative to what we saw earlier this year, because there was a huge pickup in Challenger job cut announcements earlier this year, but most of that was at the federal level. That was focused on what everything was going on regarding DOGE.
Like DOGE,
This one's a little bit more broad-based. As you mentioned with the AI overlay, the concentration for the sectors was mostly in tech and warehousing, so clearly
there's cost-cutting going on by companies, which is never a good feeling.
No, and I think what's been interesting so far, it's been relatively methodical, where it's gone sector by sector. It hasn't been broad-based across the economy, which I know I've talked about this with you guys a lot, and Lizanne, who I work with closely on this, are the sort of this concept and thesis of rolling recessions in the economy. You're still experiencing that to some extent, where it's not filtering up to the surface, and it's not aggregating together to give you a full-blown traditional recession, but it's still happening in pockets.
We know her as Lizanne. We all call her Lizanne Saunders, too.
Exactly.
That's the Lizanne you're referring to.
Well, and she's their chief global strategist, or investment strategist. The big and you guys are
my first boss, my mentor.
And she loves you.
Oh,
we had her on our program yesterday.
She's the best.
So, Kevin, going from the corporate world and thinking about, okay, what are companies doing with employees? How are they hiring? How are they firing? How are they announcing this? To consumer spending, because the consumer powers this economy.
Yeah.
We're getting some troubling anecdotes. What do you see?
What's interesting is that when you look at, this is where the labor market's so crucial to understand the differences between the stock and the flow. So the stock of labor is still relatively healthy. You look at a mostly fully employed America, and that's where we're at. Any of the layoff activity we've seen is just at the margin relatively minimal. So if you see relatively low layoffs, despite a very low hiring rate, which we're basically at cycle lows, the fact that the stock of labor is strong means that the aggregate income growth month to month, assuming you stay employed, is relatively strong. So that's why real spending is still positive. But to your point about some of these anecdotes and some of these cracks under the surface, they are starting to widen a little bit more, especially if you look at that bottom half of what everybody calls now the K-shaped sort of economy.
How do economists look at that bottom rung?
You could break it down by wealth level. I like the Fed data and looking at sort of percentile levels of wealth.
But in terms of 50%. Overall economic growth and what the Fed, how do you think about?
This is the tough part, because, when you
there's
look
a social answer, and then there's
well, the multiplier effect up the wealth and the income spectrum is just much stronger. That's just the math. And when you look at how well asset markets have done over the past couple of years, even this year, the bounce from the April lows. If you're benefiting from that as an asset owner, we have household exposure to equities at an all-time high, beyond where we were, just slightly, but still beyond where we were at the peak in 2000. So the wealth effect and the power of the market in terms of an economic driver has become quite strong and quite potent. So I think when you add that together with what is traditionally an economy that has become more, or I shouldn't say traditionally, but over time has become more powered by that wealthy cohort, then you've got a pretty strong effect.
When you say full employment, how do you define that, and then how does the Fed define
Looking
that?
Looking at a relatively low unemployment rate to history, compared to history. There has been a little bit of an uptick, but you look at that and you look at overall payrolls, and we're still right around all-time highs.
But does it mean the person who's has the computer science undergraduate degree is working in computer science or working at Chipotle?
Oh, yeah, exactly. Fully employed,
that's the question
just sort of in nominal terms, looking at it face value, a job being a job. whether that job is perfectly matched with what the person is doing, that's a little bit of a
So how do we
different
measure
story.
that?
Well,
because it doesn't. That seems like a concern right now.
Well, that I think is going to show up, probably start to show up a lot more within the next year in a lot of the labor flows that we're going to get. Because one of the longer term concerns I have for the labor market is what's happening right now in some of the churn with the pretty significant decline in immigration, but also not sort of the lack of replacement of a lot of those jobs. We're just not seeing that happen, and you see that happening in youth unemployment, black unemployment. It's really starting to spread in some of those pockets. So the areas that were supposed to benefit throughout this year, as you had more of a domestic strengthening in the native-born labor force, it's not yet happening. So it's a little bit lagged. I hope it's delayed and not completely derailed. But I think in the next year, figuring out replacements for a lot of those lost jobs, that's going to be key.
And the reason I brought up the Chipotle computer science example is
that
hungry? Always hungry.
Sorry.
But that was what was cited in that New York Times article back in August.
No.
Those computer science degrees having trouble finding those computer science jobs.
Yeah.
It's kind of this interesting environment we are when we look at the labor force. Hey, one of the things I wanted to ask you, your team shared with us that you believe Tina is back. And it's not the Tina that we think about. There is no alternative in terms of like U.S. stocks.
Equities, yeah.
But it's something we started off with about U.S. government data.
Yeah.
It is important.
There's no alternative. I mean, the depth and the breadth of the government data, you just can't match it. And I think, so far, thank goodness, the markets have been sort of maybe in a negative way, whistling sort of past the graveyard of no government data, but they've been able to manage through with corporate earnings. I think that's been a nice bridge to get us to when the shutdown ends. I think, though, the longer this goes on, I think what we have to keep in mind and what we've really been emphasizing to our clients is that when you don't collect this data, yes, you can go back and retroactively get it, but it's not going to be clean. So the longer this extends, and we don't get, presumably we're not getting a jobs report tomorrow, even if you don't get one next month, it's weird. So you're going basically almost a quarter without this really key data. So you're going to have a delayed third quarter GDP report. You're going to have missing data in a way for the fourth quarter. And then you have benchmark revisions coming in February, which kind of throws another wrench into this for labor.
So what does it mean for, I think I asked Lizanne this yesterday, Lizanne Saunders, that do we get a Fed misstep in terms of policy? Do they err on the side of doing nothing?
Yeah, I think they're nudging that way. And, you look at some of the voters and
which is what we kind of got from the October meeting, right?
Yes, exactly. I mean, Powell mentioned it himself. Austin Goolsbee was just out from the Chicago Fed saying that he's a little more, he's a little less comfortable making a move when you're driving in the dark, in the fog. So I can understand why they have to be in this reactive position. I don't fault the Fed at all for any decision they make. I mean, if they feel very strongly and highly convicted that inflation is not as much of a problem, they want to save labor, then sure, you can open up the door for more cuts. I would be sympathetic to that view if you get more data like Challenger this morning in Revelio. But on the other hand, if you do have the shutdown lasting longer and more of a delay in a lot of these government data, then I totally understand why they would want to wait. Especially if corporate earnings look like they do. I mean, the blended growth rate for S&P 500 earnings for the reporting quarter is almost 17%. So you look at that and you say, well, corporate America is still relatively healthy. We haven't seen mass layoffs. They've been in pockets.
And it wasn't just the Mag 7.
Right, exactly. It's spread a lot more. It's come over to utilities. To some extent, parts of just consumer discretionary, helping a little bit. X Mag 7, X Tesla and Amazon.
Right.
So it is a little bit of a broader story for the quarter.